Alright guys, so in the last video you learned the importance of market structure and the different things we're looking for when trading. You're essentially looking for a price to bounce around within the levels on the chart. So like any system, you have to know how to start. And the way that you're going to start trading this trading system is by simply learning how to draw the levels. It's probably the most important part when it comes to this, right? Because the areas in which you choose to draw your levels at on the chart are the areas in which you're going to be making your trading decisions based off of, and then your trading decisions ultimately will determine whether or not you're profitable. So it makes sense to know how to draw these levels the correct way. So the first thing that I want to highlight is when it comes to drawing support and resistance levels and also diagonal trend levels on your chart, is that there's no right or wrong way to do it. There's no one size fits all, put a line right here and always do this under all circumstances, and then it's just going to yield like the same results. There's no right or wrong way to do it. But where you choose to place levels will play a big factor in determining your profitability, and I'm going to go over the best places to put these levels at that are probably going to get you the most consistent results, and that have gotten me consistent results for about 3 years trading now. So let's first break down the conceptual part, and then we'll look at the applicational stuff on the chart. So just like you learned in the market structure video, price goes and it bounces around, and it just bounces around levels. So someone could say, okay, we could draw a level right there, connecting those two price levels to say that price rejected this area twice. We could also draw a level right here, and if price came all the way up there and then bounced away, we could say that price rejected this area twice. So it essentially acted as a support level here. Price broke below, retested it as resistance and fell away, retested as resistance. So, maybe this previous support level became resistance. And then also on the chart, you're going to have weird stuff like this happen. You're going to have price bounce along a level first, but then go through and then come back above it and then bounce right here and then go a little bit below it and then go way up. And then price may start going up, but then it'll come back and then bounce. And then it will break below the level, come and then bounce like that and fall away. Then it will go above the level and then come down here and then test. And maybe it'll do this again and then go below, then go to this area, and then it'll do some weird stuff and come back up here. And then you have all this weird stuff happening, like price breaking through these levels over and over, and it'll come back and retesting it, and it'll snap through it back and forth. Areas where price does this are typically levels that you don't want to trade because they're just not as clear. So let me give you an example of a very, very clear level on the chart, and let me give you an example of a level that's not so clear. A clear level would be just an area where price just bounces every time. And if it breaks it, it comes back and retests as resistance and falls away. And price doesn't really play around it too much. Price just typically, if it breaks the level, like it's only like once, twice, maybe 3 times. There's not a set amount of how many times price can break a level and come back for it to be valid or not. So don't get confused with all the racket. Just an area where price seems to interact with it pretty much every time it comes to that area. And there's nothing weird going on. There's not price slashing through it over and over, and it just keeps going back through it. You typically want levels where price just bounces over and over at the level and doesn't play around too much. Areas where price flashes under it and then goes back up and then goes under it again and then breaks and retests and tries to go down, but then goes back upwards again and just kind of plays around sideways at these levels. These are not the ones you want to trade. So let's look at a bad way to draw these levels, which is one, and then we'll look at a good way. So on the charts, let's go over here and look at the bad ways to draw them. So if I was to look at where price is playing around right now, I could say, okay, this right here looks like it's a level, right? Because I can just say, let me just make sure it's horizontal. I use this ray thing. I could say price broke above, came back right here and then bounced here, and then came back here and bounced a couple times, but then went below, and then it went up. So it's respected. Then I could say, this is a level right here. Then I could say, there's a level right here because price tried to bounce right there, then go below, and then this and this, and then it went sideways, and then it tried to reject downwards. And I could also say that this could be a level right here. So out of these levels in the chart, let's break them down and try to see which ones are simple and clear and which ones are not. So if I was to look at this, the first question that you got to ask yourself when you're looking at these levels in your chart is price breaking through it a lot, or is it very clearly respected? And respected means that price just comes to the level and bounces away most of the time. And let's look at this one. For example, Price reacted right here as resistance at that price for some reason. And of course, we're not going to know that that's a level if we're just looking right there. But then price in the future got to this area and then sort of got above it and then came back here and started going up. So we could say that price looks like it got above these prices, came back right here and tried to bounce and start going up. And then price came down here again and tried to bounce, but then went kind of below it, then tried to go up, but then tried to go down. If you're looking at this, you see how there's all this weird stuff like right here? And the same thing like right here at these two areas, like price got below it and stuff. That's an example of a poor level because it's just too confusing and price doesn't look like it respects it very clearly. You don't know a good level instead? It would be something like this. An area where price bounced at one time, bounced at a second time, barely went through but then jumped up really quickly and left this little like tail right here, this wick here, which you guys are going to learn more about as well as we study price action a little bit more. But price pretty much just bounced here twice and went above. There's no weird stuff going on. Like if you were to draw a level like that, like there's no weird, like price trying to get down from it, breaking above, playing, going back and forth. There's just nothing weird going on. You want levels that are just so clear and so easy that price reacts at them pretty much every time. So if we drag this a little bit further back, we can see that right in here, price bounced as support, came down, retested this level, bounced as resistance, and then fell. Came up here and bounced as resistance and fell. Broke above, tested as support and went up. This area right here, for some reason, seems to be an area that price pretty consistently interacts with. So it looks to be a pretty valid level. If you include, I wouldn't include that one because it didn't come all the way, but we can see price bounced the support right there, broke below it, tested as resistance and fell, tested as resistance and fell a second time, maybe even a third time if you count that, but it doesn't really come all the way up into these highs, so I wouldn't count that. But we can essentially see price broke this support level, tested as resistance twice and fell, bounced the support, tested as resistance, broke above, came back and tested as support, and then bounced up hard after that candle right there. That's what I would call a pretty clear level, okay? And another thing is that you're going to want to use recent prices to draw your levels because they work a little bit better than having levels from like way back here. Like that's a low, drawing it and then trying to look at it in the future. Price doesn't react at that level as much as it would as compared to a level that has formed recently. For example, if we're just looking at this area right here, when price was coming up here, the most recent price is right there. So that's going to be the area that you want to like base your levels off of, is what's going on recently. So there's that. So price reacted as resistance there, broke above, came back and then tested as support right there and bounced up with this candle, bounced up really quickly and then started going up. Okay. So I've given you an example of a poor level, which was right here. Like just weird stuff. Like it's kind of hard to figure out where it's at because it's weird. If you ever find yourself doing that, just click delete the level off your chart, because it's going to be so confusing and you're going to get less consistent results if you do it that way versus if you just wait for the clear stuff like that right there. Like price reacted there, came back, bounced the second time. That would have been where you put your level in, because you need at least 2 or 3 interactions of a level for it to really be classified as a clear level. So that being said, that's a clear level. This looks to be a clear level. Let's examine these lines I drew up here, and let's start with the first one just to keep things simple. So the first line that I drew is this right in here. So let me ask you this. Is this, based on what we've just went over, does this look like a really clear level based off everything going on in here? Does that look very clear, very clearly respected? Yes or no? If you said no, gold sticker for you, because that's the answer. It doesn't look that clear. What would be more clear is if we instead of trying to figure out what are the little tiny reading in between the lines, mysterious things doing right here, what if you just dragged it literally just to the lows and said, hey, price bounced right there once, it bounced here a second time, it bounced here a third time. I'm just going to wait for, if price comes to there in the future, then I'll look to make a trading decision, because that right there is very clear. Another thing is that these previous highs, when price came up here and rejected away, and then it came up a second time and rejected, and then a third time then rejected, that's a pretty relevant area to look for sells at, if you were looking to trade a sell-off resistance. And this area right here is a pretty clear area to look for buys if you're trading within an uptrend. So like I said, we're going to get into all like the actual where my levels go, and then where does my trade come in, and where does the trading decision come in. But for now, in this video, we're just looking at how to draw horizontal support resistance levels. So that's why I'm just keeping it simple with that. These levels are more clear as opposed to doing something like that. If you look at your chart and you find that price has broken through your level over and over and over, you probably shouldn't be trading it. Just delete it and take it off your chart. Let's go back a little bit more and just look at maybe one or two more examples so that way we can learn. If I was to like look closely and look at like right in there. Whoa. And I told you there's where my support resistance level is. Let me ask you this. Does that look like a clear level to you? If you answered no, that's correct. It didn't look that clear to me. Like, look how many times price goes through it. It's not very clearly respected. If you want to be super weird and you want to be really like looking at all in between the lines, you can say price sort of interacted there. It sort of bounces support there. It sort of bounces resistance there. But you could do that with any line on the chart. You could, like, I could just draw a random level like right here. And you could be reading in between the lines saying like, oh, look, price reacted as resistance there, and then support, and then support, and then this and that. And then you could also say, like, there's like another one in here, and there's like a low right here. And then your chart ends up looking like this with all this shit, with just a bunch of different lines on it. Like, you could do another one up here. You could go absolutely insane, all this stuff. But you end up doing so much stuff that it becomes counterproductive. And obviously, like, the whole premise of this course is keep things simple and control risk. So anytime anything becomes too like mysterious like that, or too complicated, or price slashes through it too many times, delete the level and just keep the ones like this right here, which is so simple and easy. Like, price came into that level, bounced, came into the area again, and then bounced away. At that point, after these two interactions, I just would have drawn a line that kind of connects both of the highs. And look what happened. Price came to this area again in the future, and then, yeah, it went past it a little bit, but then ended up coming back below and reacting and then falling. So another thing is, what if you have instances like this where price kind of pins past it a little bit, but it still overall generally respects that area? What do you do in that case? So here, let me show you. Just like we went over in the market structure video, you can use either a line or you can use a box to identify your levels. And the line will be when the level is very clearly defined like that. And the box will be when price bounces at the level pretty clearly, but maybe like once or twice it sort of goes a little bit further or a little bit past, you know, or maybe like not all the way into it. The levels like that. So the areas where it sometimes just goes just a little bit past it, it's easier to put like a horizontal box there instead of a line, because you can still show like, hey, this general area is an area where price is reacting, versus trying to get confused and pinpointing a level, but price did that like one time. And so then you get suspicious and you get weird and confused. So let me give you an example. If I were to draw this level right here, I probably wouldn't use a line for that. Even then, like, I still would, because I just understand like the gist of everything, and I'm just the overall picture. But when you're new and you're starting, it'd probably be better if you did it like that, because as you start to learn how to make trading decisions, you're going to realize that your trades are going to have to be taken somewhere, you know, somewhere around the level. Your stop loss has to go somewhere past the level, like on the other side. So your risk area, you know, might be somewhere up here. And then your targets have to go somewhere below the level if you're selling. So, you know, in this case, it would have worked out fine, but I'm not saying there was a trade here or a trading decision here. So don't try to like dive really deep into this one specific example. All I'm just saying is that like price pretty much reacted right there. But since it kind of wicked past that previous high a couple times, instead of drawing just a line and leaving it like that, see how it pins past? Instead of that, whenever this happens on the chart, as long as you're pretty confident it's the level that price is reacting at, just draw a little box. Try to get it as tight as you can. There's no specific way to do it. There's not a certain amount of like, you know, range of pips that it needs to be. Just draw it and just include most of the price data. So for instance, like, we want to include that high right there. We want to include these two highs, and that's it. And then so this looks like an area. So that way, you know, if price comes up into that zone again, it might react at that area. If we extend it all the way into the future, it looks like price came to this area again, pinned way past it, and then still sort of fell away. So it's not super clear. So I wouldn't even really be looking at that level anymore at this point, because price doesn't look like it reacted at it super well. But essentially, you're going to be using a zone when there's a few wicks past the area. Let's find one more area with the zone so I can show you guys. So an area with the zone, what if we were doing this in here? What would this be? Remember, you want the zone to be as small as possible. You could do something like that, but in this case, I would probably just use a line. With the exception of that right there, that looks pretty clear to me. Price looks like it's like bouncing pretty much clear, except for that right there. But even then, like, this just looks like a pretty clear area because it just bounces. Every time it comes to that level, it just bounces away. There's nothing too far past that level. Another area right here is some people will say like, look, that's a zone, but then price broke it and then came down lower. So if you would have drawn it down there, then it would have looked like that, which sort of worked out. But even then it had this weird spike kind of far past that previous low. That's just, it just looks, it's just not as clear. Not as clear as something like this, obviously. Let's go further back. Let's go to a random position on the chart. Let's see. So extreme highs and extreme lows are areas you want to look at. Areas on the chart where you just see like, hey, price clearly interacted right there. Price clearly interacted right there. Price clearly interacted right there. You know, for some reason, you'll just have all these prices on your chart. Just the areas on the daily and the 4-hour chart where you go to the chart and they just stand out to you so clear that you just can't ignore them. Like, look at this right here. If I was to draw a line connecting all those, looks pretty nicely respected for the most part. We've got a little bit of like leakage below it right there and there. But for the most part, price just kind of like pins at that level. Pins there, pins here, here, here. So, you know, it just looks like a pretty clear level. But you're taking those areas in the daily and H4 where price just clearly bounces away from, where it's just so obvious that it would be painful to not put the level there. If we're looking at these highs right in here, we can see that if you don't include that one and you include all these highs, you can see price reacts there a lot. However, if you want to include that price action up here, which is this price right here, I don't want to get you confused saying price action. But if you're looking at this price right there and that price right there, you can see price kind of pinned past this horizontal level. In this case, I would not use a line. I would just use like a little, like just a range, just this little box to show that, hey, I know price is interacting like somewhere in here. It's kind of pinning past, like you can't really nail it with a line because it's just, the price is pinned past a couple times. But you know for a fact that even including that data up here and this data right here, like if you were to enter a trade at this level, your entry is, you know, you're going to want to put it somewhere near the level. Your stop is going to go somewhere above everything, all those highs, all the previous wicks, all of those highs, all of that high right there. Your stop loss has to go somewhere above all of that area, because if price is finding sensitivity and rejecting right here at these prices, which is like 1.76721, then your trade is going to go in here. And if you're going to be right, it's probably going to bounce right there and start pulling down from right there. It's probably not going to go and like shoot all the way up into this area and play around. Then of course your target will be like somewhere lower down in here, and you'll learn all about how to enter trades in a later video. But yeah, I would draw this level with the zone like that. I see some people trying to like find levels like that, like where they're like, look, it sort of bounced this support and played around, but then resistance right here and resistance, but then broke above and now plays support. Why not just keep it super simple and just draw your levels like that, like at the extreme highs and lows? Or even better, like something like that, where price bounced as support. If we're including all those right there, look how simple this was. Price bounced as support, came down, broke, and then bounced as resistance and then fell away. Like that's so easy right there, because it's just clearly there. Even if you're not using a box, you could even use a line. It still kind of goes through a couple times, but that's pretty clear. I mean, there is support, tried to bounce a support right there again, right? But then broke through it, came up, retested, and then fell away. It doesn't get much clearer than that. Stuff where there's not a lot of racket going on, there's not a lot of like price slashing through it over and over, that's the best right there. I think I see another one right in here. What do you guys think of that? That seems pretty defined to me. Like price bounced to support there, broke below it, retested, fell away, and then it ended up going and making, you know, lower lows. But look how clear that is. These are the levels you guys should be focusing on. Stuff where you just look at the chart and it just stands out to you so clearly. Just draw those in the daily and 4 hour and nothing else. Nothing else. Otherwise, you're always going to confuse yourself trying to like go in here and say like, that looks to be a level, you know, like that or something. It's this and that. Like just go to the daily and 4 hour and just draw the levels that just stand out like crazy. Check this out. That was a high right there. This high was respected, but it kept falling. And the fact that these kept pinning past, here's what you can do in instances like this. Connect that one, and then all those others. Then you have a zone. So you could trade that zone as a resistance. And of course, we're going to learn like about trends and stuff in this next video, like how to draw trends the best way. There's no right or wrong way, but there are ways that work better than others. Or in this case, if you wanted to and you just wanted to be really safe, you could have just drawn a resistance line like at the very tip top of all the wicks. Because even if you're drawing a zone, like you don't want it to be huge like that. Because remember, like whenever you're entering trades, remember your stop loss has to go all the way on the other side of the zone. And you don't want your stop loss to have to be like, a million pips away. You want it in a reasonable area. And that reasonable area is just very clearly far past the lows and the highs, previous lows and the highs. So if you're drawing a zone, try to get it as pinpointed as possible. It doesn't have to be like tiny like that, because if it's tiny enough, then just use a line, because the line just shows it's a very clearly defined, easy to identify level. If it's a zone, if price like wicks past an area a couple times, you can draw a zone, but try to just get this zone as small as you reasonably can while still including all the price data of the level. So for instance, like this right here, there's a low there and there's a low there, and but then price broke this area and came lower. If I was going to draw this out, I'd probably draw it something kind of like that. So I'm still including that wick and then this price here, because chances are if price comes into there in the future, for some, it might bounce somewhere in there. I don't know exactly. I don't know the exact if it'll do it right here or if it'll do it at this low or at one of these previous lows. But I just know, like, since price is bouncing there as support, it seems logical to think that in the future, if price comes into this region, this zone, price might try to bounce it as support. Okay. So let's see what else we can find, and I'll wrap this up. I mean, it's pretty simple. Like, all you're doing is you're just going to the daily and H4 chart, and you're just identifying the most recent horizontal support resistance zones. So let's take everything off the chart, and let's go to where price is currently at, and let me show you how I would mark up this chart. So how I would mark up this chart right now, let's see. I see a clear set of lows right here, and then I see a clear resistance zone right here. Price just wicks through. I'm just going to use these highs for the most recent zone. These sort of become irrelevant. Like I said, the most recent data is the best. And since price bounced right here for some reason, the most recent high is right there. So yeah, the zone could be like up there at that top, or it could be at that wick right there on that candle, or it could be at this one right here. I'm just going to draw it where it incorporates almost everything, because chances are price comes up into this area again. Of course, my stop would have to go above that high if I took a sell for some reason. But if price gets into this region, it's likely it's going to react, because look, it's reacted once, twice, 3 times already. So, we might look for a trade right there if price comes up and starts rejecting that zone. So right now I have that one and I have this one. Do I see anything else? I sort of see this area right here. But then again, price bounced at this area and it sort of broke through it. So here's what you do. On the daily, after you've identified your main daily zones, which for this, all I see, like price is hanging out right here right now. So we don't need to be doing stuff from like way far back here, because none of that's relevant. Remember, you want as few things on your chart as possible. Whenever you guys look at my charts, like I usually have no more than 5 to 10 lines on the chart marked up. Sometimes it's more. I'm not saying that verbatim, but I'm just saying in general, you only see me working with a couple lines at a time. Just a few diagonal lines and a few horizontal lines. So this right here, price looks like it's broken above and it's bouncing as support right now. So I don't know if that's the level or if it's somewhere up here. But since price is sort of bouncing and going up now, I'm going to go to the H4. I'm going to see if I can get a better look at this. So if I was to draw a level right here, I would say that for some reason price looks like it's broken above this area, come and bounced. Now it would have been better if it would have bounced right up there, because that would have been a clear level. However, I'm not going to ignore the overall fact that if we're just zooming out and looking at the big picture, this was a very clear set of highs that have like rejected right there, there. And now the fact that price has come back into this zone and is now bouncing up, if price holds this zone, I'm not going to be making a trade based off of it. But if price starts going into another uptrend and it starts going up again, then I'll look to identify more recent horizontal support resistance zones and look to trade them. So this being said, that's all I see as far as horizontal zones. If you wanted, you could draw like a support right here, just like I used in the example before. If we wanted to put this into a line up here, maybe something like that. But even then, it looks kind of hard. It's kind of hard to identify. That's probably the clearest level, because that is like resistance, 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 resistance. Broke above, tested as support for a second right there before shooting up. Came right here, tried to bounce the support, broke below. Now it's working its way back above. I'm just going to leave it right there for now because that looks to be the most clearest zone. And those are all my horizontal levels. That's all I really have on the chart. The fact that price is like currently at this zone right now, I wouldn't even have that on there. I would just have my extreme daily levels, because those are the levels that when price gets to one of those, you're going to want to be getting out of most of your trades at those levels, unless you have a lot of reason to believe it's going to break past. But your daily levels are going to be your main reference points, because that's just like price swings around these daily zones, and the daily sets the precedent for all the lower time frames. The only time frames I use are the daily and H4, and every now and then I'll dip into the 1 hour chart to just simply look at the wicks to see what price is doing at significant daily zones, daily and 4 hour zones. So that's all I'll do. I'll just go here and look at what the wicks are doing. But really, I don't trade the 1 hour chart, just because you can start getting crazy, drawing all sorts of levels. Like you can start drawing a level there. You can draw like a level right here. You can just, you'll find all this shit on the chart, because you're like trying to like, but then when you go out to the daily and H4, like you'll see like that shit right there. Like you can't see it clearly on the daily and H4. That has like ultimately no relevance in the grand scheme of things. Sure, for the time being, for that little move, right here, which is like however many pips that is. How many pips is that? So for the time being, like right there for that, what is it, like 100 pips, maybe 50 to 100 pips right there. Yeah, that zone mattered for the time being. But if you want to capitalize on your big trades where you're getting really solid, huge winners, most of the money is going to come from the trades where you're looking at daily and 4 hour levels, just because they're the simplest. They take the least amount of time to analyze, because they're just, you go to the chart, you just put 1, 2, 3 levels, 4 or 5, whatever. And then you just chill and wait for price to come there. And since price reacts very slowly on the daily, 1 new candle is painted a day. On the 4 hour chart, only 6 candles that are new candles are painted per day. Because in the 4 hour chart, each candle represents, 4 hours worth of price data. So 6 candles times 4 hours of data for each candle. It's 24 hours of data. All your job is to just click through all your pairs, at the end of the day and in the morning as well, and just see where price has gone. And all you got to do is, every day you get an update of 6 new candles in the 4 hour chart. It's just so much easier to just do it that way. So like I said, daily and H4, I don't really recommend going to 1 hour whenever you're first starting, but after you've got the feel of things and you're really confident within the daily and H4, your trading's pretty consistent. If you want to go to the 1 hour chart to just look at what the wicks and pin bars are doing, and you feel comfortable doing that, then go there. But remember, as with anything else in trading that I say, less is always, always, always more. Because the less complicated you can make something, the more duplicatable and the more repeatable it is in the future. And if you're finding yourself having to make like 15 decisions to enter one single trade versus maybe like 2 or 3 decisions that lead you to take the trade, the 2 to 3 decisions is something you're gonna be able to duplicate a lot more easily. It's gonna be like take less time, so it's less time consuming. It's just gonna be so much easier. So just the plain and clear level. So with me on this chart right here, if I'm going to the daily and then the H4, these are the only clear areas of interaction that I see for the time being. Now, if we wanted to get, like really in depth and stuff, I could start putting levels like at all the lows. Could do a level like right there for the break and retest right there. Could put levels like right there. But the thing is like, remember, you only want to work with what price is currently doing recently. So recently, prices right here. Like we're not going to be concerned about something all the way down in here unless price starts getting into those zones. Then when price gets there, then you'll say, okay, price, where's the last area interacted around this price? Well, the most recent area was right there where price bounced with like, 2 or 3 lows. And then if price were to break that level and come down here, then you could say, hey, in the past, price reacted as resistance there, broke above, acted as support. You can maybe put that level in your chart and keep an eye on it and see what price does. And if price gets to that level and then starts reacting and bouncing, you could see price bounce right there. And then if price were to break below this area and come down, you'd be looking at, okay, where's the last place price interacted with? Well, if we just go left, it looks like 1, 2. There's like 2 lows right here, which were pretty clearly respected. So price may react right there in the future. And if price starts to react right there and show rejection, then you could look to take trades based off that. But all that is irrelevant for the time being, because the only thing right here is that price is like coming into this level and it looks like it's trying to get above. So if anything, you're going to learn trends in the next video like I showed you, but if anything, price may be starting to do an uptrend, and it may be breaking above these levels and coming back and retesting. And then at which point you're just going to simply look to trade breaks and retests of horizontal levels within the clear trends. And as price goes up, these levels will like paint themselves in the chart. You'll see price maybe come up into like this region, and it'll like bounce as resistance for a while. Then it'll go up above it, and it'll come back and maybe start bouncing as support. Then you can start taking your trades right there with a buy. And then price will go up and maybe crack above the previous resistance, and then it'll come and test it as support. And so in the future, price may do some stuff like this where from right now it goes up and it bounces here like 2 or 3 times, comes down to the trend line area. Maybe it bounces along the trend, goes up here, and then maybe it comes back and then comes in the previous resistance zone, turns into a support level. Or maybe it just takes a really long time and it comes all the way here and it bounces along the trend line and support level. And then from there it may go up and break the previous highs. But this is what will happen is you're going to have these levels painted on your chart here in the 4 hour as price continues going up. But the whole goal is to just start on the daily, draw in just a few lines where you see prices like recently at. Just a few lines near where price is at. Then on the 4 hour, you can start look to identifying, the trends and the breaks and retests of the horizontal levels. So in this video, you have learned how to draw horizontal support resistance zones. In the next video, you're going to learn trends. If I were to give you a main takeaway from this video, keep things simple. Very, very, very simple. Only daily and only the H4 charts. That's all you really need. That's all you really need. And then the 2 things with the line for identifying very clearly defined levels. And if it's not so clearly defined, but you still want to include the level in your analysis, then just draw a box and try to keep that box just as small as possible. So that way you're pinpointing in the level as best as possible. If price is doing some stuff like that, like it's clearly like just slashing through it over and over, then don't try to make the level work. Just take the level off your chart and just draw stuff that's just super clear, like something like that down there. Obviously with a little bit smaller box, but so yeah. And then of course we'll learn trends in the next video. So let's jump right into the next video. I hope you guys learned how to draw horizontal support resistance levels. As you continue through your Forex journey, you will keep getting better at this, and you'll become more comfortable with the levels that you're drawing on the chart, stuff that makes more sense to you, stuff that makes the most sense, stuff that's the simplest. So just practice it for a while. During your 2-month demo practice period, you'll be practicing this stuff for 2 months, and you'll kind of come to a sweet spot of levels that seem the clearest to you, that seem to work the best. And it may be slightly different for everyone. So that being said, I'll see you in the next video.